Okay, good afternoon, everybody. This is Dennis Wilborn, the Active Trend Trader. I want to welcome you all to today's session on how to make money trading stocks and options. We've had a little bit of several comments already about it's been a challenging week. There's been a lot of whipsaw going on around there. Steve has joined us from downtown, and basically Steve says we are on the cusp of something really big, right, Steve?
Absolutely.
We just don't know whether it's going to, which direction it's going to be big in at this point. I mean,
I have an opinion, but it's still an opinion.
Yeah. Okay, so let's go ahead and jump on to today's session. I want to welcome everybody, and we do this this webinar in our live stream typically every Friday at 11 a.m. That's Pacific time. Now, it's much earlier in the morning here in Hawaii. And so if you are joining us and you do have comments, feel free, drop your comments into the comment box or the chat box. You can use the question and answer box, but I don't pay that much attention to that, and so I don't want to miss out on your comments. So please drop it in the chat box, and so we'll continue from there. A couple of things we're looking at, again, as I said, every Friday, 11 a.m. Pacific. What we do is we go do a quick market index review, master trading tip, and then a stock pick of the week. Steve's got a really good one this week, and he wants to make a couple of follow-up comments on the pick from last week. So always remember that what we do is for training purposes. Traders should always pay per trade any new method prior to the risk of their own personal capital. Here is the tip of the week. Don't watch the market all day. Why is that? Well, you know that especially the trading site, not the trading sites, but the financial networks. Watch out for trading. Watching those during the day. They are designed to keep your emotions elevated, and when your emotions are elevated, guess what? We make impulsive, emotional, compulsive trades, which are oftentimes dumb trades. So how do you avoid that? One, plan your trades during non-market hours. That is absolutely critical. And Dennis sees where he needs to make a quick change. There we go. Plan your trades during non-market hours. If you have the capability and your platform allows it, put in your orders conditionally. That way you can just say, hey, they are on autopilot. Works really well. Schedule your market exposure. Let's say you are a morning person and you want to check the market first thing in the morning. Schedule your exposure. Don't sit, you turn on your computer at whatever time the market opens in your area. That's great, but don't be sitting there 3 hours later still watching it. Again, watching the ticker, watching the price action move on a price chart is another one of those things that basically deadens our ability to make wise choices. And also, a lot of top-ranked traders, they say don't make any decisions while the market's live. Have your decisions already made. So if you're an afternoon trader, I really like here of late, I have liked trading the last 2 hours of the day. In other words, I'll go in, and even if it gets down to it, the last 15 minutes, all the BS for the day is basically done. And now we're just waiting for things to settle out. And you get a very, very good picture of what to anticipate. If we have a trade trigger, you can go ahead and order at that, and put in an order and enter at that point, or, do it, plan it for the next day. So identify the best time to watch the market for you. End of day provides the most accurate picture of daily price action. I really, and that's another reason why I like the end of day. In the morning time, during the first hour and a half of the market open, you get a lot of, they call it amateur hour. You get a lot of buyers and sellers just coming in there and whacking and beating each other up and all that type of stuff. A lot of action, a lot of moving, and then it basically, it's a good time to get hurt. And you can write this down, if I were to look at two different times in the morning, for me personally in Hawaii, it's 5 to 5:30 in the morning. That's a good window block. That's when things tend to turn back around to whichever way they were going to start with. And also a good time for setups to show up on my intraday charts. And then the last one, as I said earlier, the last half hour of the day, and that's fine. Focus on the few. Again, if you have 50 or 70 stocks on your watch list and you're watching those tickers while it is on, that is doing nothing but just stirring up your adrenaline and getting you emotionally fixated. And I even heard a recommendation from a very wise trader this week. He says he doesn't even watch the indexes during the day. He focuses on the stocks he wants to trade. That's it. And, and these are just suggestions that maybe something you might want to try if you get where you are an impulsive, jump in at the spur of the moment type of trader. And so good stuff there. Let's take a look at, if you are looking for a time-tested and proven trading plan, drop me an email. We'll get you signed up for our free newsletter, and also I'll send you a copy of the tested and proven trading plan, the active trend trading plan, and if you send me an email, give me a day or so to be able to send that back to you. So here's what we're looking at as of about 9 o'clock this morning. One, I got caught slightly in the downdraft for this week, and we were taken out of some stocks, so we had a really good profit in. We were taken out of them, and so that is part of the game and part of what you expect. NASDAQ down for the week, or down for the year so far, and down from last year's high. And all the other indexes also gave back a little bit, but the Russell is still Mr. Powerful, and followed up with the Dow. And so what we were seeing a lot this week was a lot of sector rotation going into that they call the staples and all that type of stuff, as Congress and the Senate are looking at passing more spending legislation, more stimulus, and which tends to favor that side of the economy. It will be interesting to watch what's going to happen to the small cap, because oftentimes the small caps do not do well in inflationary type times, and or with increasing interest rates. We'll see what transpires from there. So let's go ahead and here's one of the things that I really like what Mark Minervini said earlier this week. He basically says, we are currently in the most dangerous market condition for breakout traders, a whipsaw environment. And those of you who got bit by some whipsaw this week, just I think we can almost all raise our hand with that particular situation. But let's go ahead and jump over to the indexes and see what they are telling us as of right now. One of the things I look for as I'm assessing and evaluating specific, let me get my drawing tools up here. Specifically what is going on is that okay, we had a very nice turning towards a reversal on the momentum. The momentum has not totally shifted to the upside yet. Today's price action, first thing this morning, it takes out the high of the low day. That oftentimes can, in a stronger market, that is an excellent opportunity to get long the market. But by waiting to the end of the day, we're seeing, what are we seeing? We are seeing that sellers have come back in at these old, highs, where there's a bunch of sellers that had gotten in this area here. They're selling the market off. Now, it is staying above the 8 and the 20. We'll see if that continues. But as we look to the left, what are we seeing? We've got a nice downtrend. We broke out of the downtrend today. However, again, the long tail on top of this candlestick, making it kind of a shooting star kind of candlestick, is looking like we may want to drop some more. Take the longer perspective though, where's it likely to go? Watch for a pullback back to approximately the 20-week moving average. What does that correspond to? That corresponds to the 100-day, approximately the 100-day moving average, keeping us still well above the 200-day moving average or 40-week moving average, which is down here. So overall, long-term, very bullish on the market. Short-term, we may not have found a bottom yet, but we're searching. If price action continue to fall throughout the day and goes back down, and it may come back down and retest this lower low, because right now, short-term, we have a short-term downtrend in place, and that has not changed. So that's what we've got for the S&P. Let me go over here. There we go. What about the Qs? Qs has been acting much weaker. Of course. Okay, let's take a look here at the Qs. There we go. Gonna get to the right puka. Now all the guys in Hawaii, they know exactly what I'm talking about when I say puka. So what's going on here? Okay, price action below all the moving averages except the 200. That is a bearish type of, or a sign of market weakness. And what's happening today? We had a price action today. Took out the high of the low day, couldn't hold it. Got right up to the 8-day moving average, is reversed down lower. We may take a look at this towards the end of the day and say, you know what? Let's go ahead and do like we did last week. We put in a bearish credit spread on some calls last week on I think it was IWM. Worked out fine. Took off most of the credit for a profit. And so we may be looking for the same thing on the Qs. Everything is lined up. The TSI heading down. Market forecast heading down. TSI weekly heading down. We are approaching a level of strong support, long-term strong support. So what may happen is price action may jump into this area down here, and that's where it would do its turnaround. But we just have to stay awake and watch what's going on. And then last but not least, one of my favorite entities is the Russell. And what's the Russell doing tonight? Okay, the Russell actually did a really hard sell-off for most of the week. And this is where we took the trade up here last Friday, and it sold off hard. So hopefully the majority of that got into that bear call spread with us last Friday turned out to be very profitable. Came hammering down, hit right on the level of past support, which was a former breakout area. Took out the high of the low day, positive. However, right up to the 8-day moving average, and is now failing. So we'll take a look at this at closer to the end of the day, see if we want to do the same thing with IWM that we did last weekend. So Steve, that's about all I have. And as you said, it could go either way. I'm looking at, we have kind of and I will point this out, is we have the first 2/3 of a potential head and shoulders shaping up. But longer term, of course, the trend is still which way? That way. But it may give us something tradable to the downside. And as long as, it may work its way all the way down to the 100-day moving average or the 200-day moving average. So what do you think?
Pretty much agree with you. I think for me, the line in the sand and on the IWM, it's really classic Wyckoff trading range. That dotted line you have pretty much coincides with the lower edge of the trading range. And I think the key is, do we hold that level? And if we breach it, do we breach successively with large increase in volume? Yeah. If we just undercut and get back above it, I think that we may be at a bottom in the market.
Yeah.
And we could breach through that on good big volume, and that would be very negative.
And so without a doubt, so that is a big line of demarcation. Let me give you a number on that line. That number is about 207.76.
Yeah.
So good stuff. Okay. I know
this week is Deere, DE.
Deere is one of those kind of, it's not really a staples, but it's with the anticipated movement into some of the working projects.
Yeah, and I think it's also kind of an inflation play as inflation starts to develop, albeit slowly. I think in the next few years, then the commodity type stocks and industries do quite well.
Okay, tell us about it.
And it's also not obvious an artificial intelligence play. It's actually a pick by Kathy Wood, who runs the ARC funds.
Yeah.
And she sees Deere in the agriculture space, probably the company that has the most information with which artificial intelligence is likely to transform the industry.
Okay.
So it's indirectly a tech play, kind of like Tesla is a tech play, not an automobile play.
Yep, without a doubt.
Yeah. Anyway, so I like Deere. I've been trying to get onto this for quite some time, and I think the pullback we had this past week gives us a wonderful opportunity to begin to take a position. Let me see. Look at get my chart up. I think I would be a buyer today, although I don't like I think the reversal was yesterday.
Okay.
And the weakness today may give us an opportunity to buy at a better price.
Okay.
You could wait till Monday, but I think today or Monday is provided the market doesn't come apart, would be a nice time to try to get onto this stock.
Yeah, I like that also. The momentum hasn't absolutely 100% shifted.
It hasn't, but it's starting to. Yeah, it's starting to give us a little bit of a glimpse that it might be shifting to the upside.
Because, we can draw here's one of the things I'm looking at right here, if I can get it to draw it for me, is we do have there was a trend line that was about there.
Right.
Now that broke yesterday.
Right.
And so we started moving up. So that's a very positive. The volume yesterday was right at about average, but that's not a bad thing. And so we'll just have to see what today brings. If you did get in and close today, where would your stop be?
My stop would be under yesterday's low.
Under yesterday's low. So let's get an estimate of where that would be approximately. It would be approximately about a 4%, about a 4% drop. So that's excellent. And then it's upside potential there. If I was going to go 4%, I've been learning some stuff, talking to Mark from Mark Minervini about he takes his potential loss, his stop loss,
right,
and he utilizes that to determine what his initial profit target has to be, because he wants to hit 2-to-1 or 3-to-1. So in this particular case, if I was doing a 2-to-1, we'd want our basically our first target to be up right there, about the $9, about the 9% mark. And I'll bet you a dollar to a dime that that corresponds very closely to the 1272 Fibonacci extension.
Yeah.
Let's see.
Right there.
How about that? 1272 extension, right on the, almost right on the nose. Very interesting. So,
Yeah.
so that would be my, if I got in here,
Mm-hmm.
if my stop was down below that, that would be my T1 that I would set up.
And I use that 2-to-1 risk reward as my initial target also.
Okay, cool.
And
so now you wanted to
quickly a few comments.
You wanted to apologize for choosing Schwab?
No, not at all. Not at all. I think, but if you trail, I think the point I'd like to make is if you trail the buy stop on the pullback.
Yeah.
We looked at the stock on Friday where it was looking pretty strong. But if you didn't get in on Friday and just trail a stop above the high as the bars trailed lower, and you consider market action, yesterday would have been a nice entry.
Yep.
And you could still get on today, but there may be more of a pullback.
Yeah, exactly. I mean, that's one of those things where what I've been looking really hard on is these flags that you see like shaping up right here.
Yeah.
And this is, crap, excuse me. There we go. Get the right drawing tool. This flag, and this is also a sign of market, current market weakness. Let me grab it, darn it. Stretch it down across there. And basically, as soon as that, basically a little flag was broken. Now, we didn't get a close above it on Wednesday, but we did yesterday.
Right.
That could have been at the end of the day a good closing
entry. Yeah.
Or a move above the high of the low day, which is happening today. However, another one of those things I like about looking at the last 10 to 15 minutes of the day is if I would have another choice to make, because it appears like it wouldn't close above the high of yesterday.
Correct.
So then I can say, you know what, I'm going to hold off and see what it gives me on Monday, because we know the market is a mixed market. We have two of the indexes that are weak, but by and large, this is looking really good. I agree with you. We've got TSI trying to cross up.
Nice.
We do have longer term though. TSI over on the weekly chart really negatively divergent, and so I mean, it wouldn't hurt my feelings if this came back down and retested even down at that level there and then popped up.
Sure.
And if that happened, I would be looking for strong positive divergences on my momentum indicators to be able to jump on that trade. But I think it's a great trade, a great opportunity.
And I agree also with the comments you just made. There's
so, this is where some of the people who do the options, Steve, they'll basically wait for it to drop down a little bit, maybe back down and retest the 20.
Right.
And they'll go ahead and they'll sell puts against it with the anticipation they want to buy, have shares of Schwab. And so they'll buy the puts. And if it gets put to them, that's okay. Because then they turn around, they sell covered calls on that.
Right.
And so it's a great way to build a position in Schwab at a discount. Yeah. So awesome choices, my friend.
I agree wholeheartedly.
Yeah. The other thing I would be looking at, Steve, and I'll just throw this out here really quick, is I have and this is what I like about using the TSI, is I've got that line right there.
Right.
Shows me my momentum until that line is broken right there. Or also I've got one here. Right. Which is close.
Yeah, and that one's close. That one's very close.
But until that actual line is broken, my momentum hasn't officially switched.
I agree.
So
it's cool. It's something I'm watching very closely for an entry.
Right.
I actually entered a partial position yesterday, and I'm looking to fill out the position as the momentum comes in.
Gotcha. I love it. I love it when a plan comes together, and that one may be coming together for us So, hey, we talked about our journals last week. If you're interested in getting a journal, check it out on, look for the 2021 version of the mini version or the Mac or the mini or the Max trade journal. It is a top seller on Amazon. And if you're watching us on YouTube, that the links to the journal is down in the comments section. If you're not watching us on YouTube and you'd like me to send you that, just drop me a note and I'll send you the links. They're really reasonably priced. I think they're about $14, $15, which if you've priced out even a spiral notebook these days, and this one has all kinds of stuff in the inside, the active trend trading rules, plus the setups, plus all kinds of stuff to help you become a better trader. So until next week, I just want to say, hey, thanks for joining us. Continue to work hard on the reset of 2021. It's all about wealth building for me. And so keep growing the egg. If you're premium members, we'll be back at the top of the hour for the final hour. So from our home to yours, aloha. Trade well and prosper. Keep sharpening the saw. Aloha. God bless. And if you're joining us on YouTube, please subscribe, hit the bell to be notified when we put in additional training material. And a video will pop up right there that is a good one. I've got a couple of really good training videos out there some on Fibonacci, some on how to use the on-demand feature on Thinkorswim. So, Steve, thank you very much, my friend.
Pleasure.
We'll talk to you again.
Have a good one.
Okay, thanks, everybody.